Hello, and welcome to the September 2024 issue of the Zavitz and Sykora Financial Strategies video newsletter. Thank you for tuning in and listening to our update. I'm your advisor, Greg Sykora, and joined with me is my partner, Mark Zavitz. Today, we're going to go over how the U.S. election will affect your portfolio or not affect your portfolio and what you might want to expect performance-wise, depending on who wins the American presidency. So let's get started. If you tune into the news, you might have noticed that the general opinion amongst professionals and money managers and investment professionals is that Trump will be better for stocks and Harris will be better for bonds. Bloomberg sent out a survey to all of their Bloomberg terminal holders asking what they thought or who they thought would be better. What's a Bloomberg terminal, might you ask? A Bloomberg terminal is like a computer system that provides financial info about every single company in the world to investment professionals. You get real-time access to basically every single stock market, currency, bond market across the globe. It's a subscription that costs tens of thousands of dollars a month, but gives you access to a lot of financial data you can't get anywhere else. Most of it's original and exclusive data. So if you're an investment professional and you have to make big decisions, you typically want access to this type of terminal. I've used one a few times in my career at the various financial companies I've worked for in downtown Toronto, and they usually have one or two because it's so expensive, and it was really cool to use. So why this consensus after this headline? Well, Trump, if elected, will likely cut corporate taxes further, similar to what he did in 2016. And the market thinks that will juice profit margins for stocks, making stock valuations better. The market isn't so sure about how Kamala Harris is going to work with companies and how that will affect stocks, but it thinks she'll bring some geopolitical stability as well as be less likely to engage in trade wars with things like tariffs, both of which should keep inflation down, making her better for bonds. And as we head into the final month before the election, do you think we should expect big swings in our portfolio? While the US money manager T. Rowe Price analyzed what happens to US stocks in US presidential years leading up to the month of November versus non-presidential years leading up to the month of November. And to my surprise, in presidential years, volatility tends to be lower leading up to the month of November. Not what I expected. So historically, for the next month or so, we should actually see less volatility in our portfolio than what we would normally see. And that's a good thing if it's obviously bad or negative volatility. Mark, I mean, we talk to clients every day. We don't really know what to expect. This kind of contradicts what we're all kind of thinking. We're all thinking, there's all this uncertainty out there. This is probably going to make stock markets act like crazy, go up and down like crazy. Mark, what do you think about this?
Well, Greg, your chart clearly shows that in a year where there is a presidential election, that the volatility, the blue line, it looks like about 95% of the time, the blue line is lower than the green line, which means that in a year like this year, volatility is lower. And so that's really interesting. We have had some clients want to talk about this, and like you said, there's a fair amount of uncertainty in a very close election, and you would think that would translate, into a lot more volatility, but it doesn't. So thankfully, because we've had some volatility in the last 2 or 3 months, so I'm looking forward to the calm that's going to come. The calm that's going to come in the next 2 or 3 months leading up to the election.
Yeah, and hopefully less headlines that just you constantly get bombarded with that, are talking about the economy and the election. I'm just tired of it all. But anyway, so if there's less volatility, what about, investment performance? how historically have US stocks performed? And if we use the S&P 500 as kind of the measure for US stocks, well, in presidential years, average returns for the S&P 500 have been slightly lower on average than non-presidential election years, as seen here by the blue bars. But, to me, if I look at this, I don't really think it's significant, which means I don't think it has that much of a significant impact on returns, a presidential election. Again, this contradicts what we're hearing in the news today, but this is the statistical historical proof. So, what about following or after the election when we know the election results? Well, if we look historically at what's delivered the best performance, it's a Democratic presidency and a divided House and Senate. So if you're cheering for the best outcome for your portfolio, this is it. And yes, this contradicts the findings from the Bloomberg Terminal Opinion Survey I was just talking about that thought the opposite. But based off of the polls that we're seeing today, what looks likely to happen? So far, it looks like Kamala Harris is going to squeak out a win, that the Democrats are going to lose control of the Senate to the Republicans, and that Republicans are going to lose control of the House they currently control to the Democrats. So again, that would be scenario 3, a divided Congress with a Democratic presidency. The other highly potential outcome, scenario 6, if Donald Trump wins with a divided Congress, also leads to positive markets, but slightly lower returns. So I found that interesting, and I actually went to go look for any sort of supporting sources or information I could find that that backs this up. And what I found was an S&P 500 chart, going back about 70 years with the White House Historical Association as the reference point. But, does it really lead to lower returns, one presidency being Republican or Democrat over the other? Well, another way of looking at a Democratic versus Republican presidency is simply looking at these calendar year returns and taking the average. So if we go back about 7 years, a Democratic presidency based off of this has led to an 11.4% annualized S&P 500 return, and a Republican presidency has led to an average of about 7%. And that would support the previous slide I showed where Democratic presidencies outperformed. But if you take out or strip out 2008 performance as just like an outlier, what I see is that returns are, I don't know, pretty similar, which to me just goes to show how kind of data can be manipulated and skewed. But the point of all this is to say that I think regardless of who wins, the markets will continue to go up. And I'm feeling pretty good about the next few years for your portfolio, regardless of who becomes the next US president and how we feel about it. Why am I feeling good? Well, that's because inflation's been coming down. Growth rates in earnings have been going up. We're in this, what's been coined as a Goldilocks market environment, because we're living out this soft landing scenario. And, we were talking about hard landing, soft landing, and inflation for quite some time. To remind you, a soft landing scenario is where we have strong economic growth, continued low unemployment, and falling and stable inflation. So that type of market environment is very accommodative for risk assets. It's good for corporations, and that's because the definition of a strong economy, basically. Of course, it's going to be a bumpy road, but I don't see why the market can't continue doing what it's just been doing for the foreseeable future. Mark, just anything you want to add before we end this update?
Yeah, just that I agree with your take that it's certainly, we've turned the corner finally after 2 very difficult years with horrendous inflation, and I think today I just saw a report out of Germany that their inflation for the previous month just came in at 1.5%. So, we might be moving into a deflationary environment not too far down the road. But slowing inflation, falling interest rates, a growing economy.
Yeah.
Uh, Profit margins are going up. Yep, really, there's a lot of good things that are happening that are going to provide some positive momentum for the markets.
Yeah. And if for whatever reason a Democratic presidency also gives some tailwind to the market, then, which is, I think, a better chance to happen than a Republican presidency at this juncture, then that could be an even further tailwind to everybody's portfolio. But we have yet to see how that's going to unfold. So, and there's about a month to go. We'll see how it all goes. Anyway, thank you so much for tuning in and listening to our update. Hope you have a great month ahead, and we look forward to presenting our next monthly update.
Thank you.
Thank you.